I preface any stock market discussion by saying if you want to learn the technicals, it might take you a week or a month, and then you're going to need life experience the rest of the way. And ultimately, pretty much every bet you make is a 50-50 shot.
Market speculation and stocks being overvalued or going up for non-technical reasons. Okay, you could say that about Netflix stock is overvalued. You could say Tesla stock is overvalued. You could say Facebook stock is overvalued. So if your argument against what's happening with GameStop is that the stock is severely overvalued, I got a bridge to sell you. Kevin O'Leary went on CNBC, said a couple of quotes that legally, if we're going to play them, I'm just going to play them and see what YouTube algorithm says, but he makes some really good points.
There needs to be a review of this entire conduct. This is extremely dangerous to the marketplace and dangerous to our economy.
What do you think, Kevin?
I don't agree with any of that. The truth is the market has always been a speculative place. No, but I think you have to hear the other side of this, Bill, because at the end of the day, there's some very powerful forces in play here that are actually good. So let me take a shot at it. The definition of the market is speculation. When you buy and stay long a stock, you're speculating the profits you hope are going to come finally appear, and you take that risk. The best thing we could do for this market now is leave it alone and just shine the light of transparency on it. If you are short, let it be transparent. You now run a new risk that these effective social media vigilantes are going to come after you and squeeze you as a short. That's going to make a lot of hedge funds think a second time before they try and go short stocks, which I think is great.
And he talks about financial advice. So anyways, so there we go.
It's people making money for nothing really, and now they're losing money. So to me it's people, Epstein came out of this circle, right? Like there's some pretty bad people that have come out of this type of hedge fund circle. And to me it's evening the play field. I don't know. It's the people making people, and the ironic thing about it is that the poor people taking money from the rich people. And the one caveat to that is Robin Hood, which is completely ironic, is trying to stop it. To me, that's the most hilarious part out of all of it, is that Robin Hood is trying to stop the rich from being taken. Normally, I don't agree with Kevin O'Leary. I probably disagree with Kevin O'Leary 99.9% of the time, but...
So out of 1,000 things that he says, you disagree with 999 of them.
Correct. But on this issue, I completely agree with him. I think that this is the market. You have to take the good with the bad. And, those people made their money legitimately, whether you agree with that or not. That's too bad. And the fact that they're trying to stop the buying, it's manipulation of the market, right? They're trying to stop people from buying the stock. And it's just an unfair playing field, right? And it's the reason it's uniting people on the left and the right. It's because it's a class thing, right? Like you have these people at the top and they're making money for doing nothing, and that both left and right, you look at that and you're like, hold on, like how is this fair? How are people and then people unite to like, okay, they're kind of saturating the market, but they're doing it within the rules.
So there's political meandering with this when they're trying to murmur about some kind of regulations and having a license to actually purchase stocks, which would actually drive us back to the 80s when you essentially needed a broker to buy and sell stocks. And maybe I'm making a bunch of mistakes on that, but I believe up until the late 90s, I don't think an individual retail investor was able to do it basically without paying somebody somewhere commissions. And now it's $10 a trade. Now, I will say Wealthsimple came out and said that they weren't going to stop any trades. Yeah. And I think, not a fan of their ads, right. But it seems like this is a giant ad for them. Because all those people on Robinhood, and I've seen it, so Reddit, I've started using Reddit a lot more than Facebook the last year or so. and you can definitely see the community vibe there and how Wall Street Bets has grown. I personally, I think even if you're not part of the community and you're just coming into this and you're just learning about everything that's happened with GameStop, as good journalism, you should probably, spend some time on Reddit, and you can get the vibe. Very similar to YouTube comments. And I found with, how a lot of videos, there's no commenting on YouTube, right? So they've taken that discussion out of it, and it's basically transferred over to Reddit. Now, when it comes to Robinhood, I think that it's as bad of a PR as you can possibly get, especially when you have a competitor, right? Like if they were all piling in on it, and TD Ameritrade is the other one. Yeah. TD Ameritrade was the other one with Robinhood that stopped it. And there was a bunch of other ones. But when you have a competitor like Wealthsimple, which is a huge competitor, and they're coming out there and they're saying, we're not going to stop any trades. How are you not going to eat that?
They've cornered the market at that point. Yeah. They've cornered the market at that point, right? Because it's like, well, you're not doing it, we're going to allow it. So everybody's just going to make their trades with this company. And if you're Robinhood, you're okay, you kissed up to the people with all the money, but tomorrow, you never know, tomorrow they might not have any money, right? So it's like you've kind of screwed yourself. You put yourself in the corner, and everybody's just gonna go with the with Wealthsimple. It's that simple. There's no going around it.
So outside of GameStop, the trend right here is, and this is a trickle down aspect. So I'm going to explain to people that might not know that much about stocks. Like it was interesting, all the information about shorting that was coming out on Facebook and everywhere. It was explaining shorting. Look, if you wanted to watch The Big Short and you didn't know what shorting was before that movie, that would be probably, if I'm trying to suggest a view for somebody, I would say watch The Big Short. Entertaining movie, kind of in the vein of Wolf of Wall Street, not as extreme, but definitely in that mindset. So if you liked Wolf of Wall Street, very good movie. You have a trickle-down effect whenever you have a movement. So the cannabis stocks or the dot-com bubble crash, when you have number one, which is in this case is GameStop, and so that's the number one stock, that's the one. So it's basically ballooned to 70, 80 times whatever it was about a month ago. Typically, what happens is if that movement continues with Reddit, where they're trying to go after the short sellers, and they're trying to kind of prop up these undervalued, or it's a troll or whatever, then what you're going to have is eventually people are going to take their profits from GameStop. And if you're talking about 30, 40, 50 time profits, they're going to take that and they're going to put it in some of these stocks like BlackBerry, like AMC, like Nokia. Now, what's interesting about Nokia is that that's actually a very good stock, and there's actually not that much short selling. So it'll be interesting how that goes. And I don't want to, I would just say, if you were asking for my advice, and I am licensed to give advice financially, I would say it's not a bad pick, just generally. And the price that I was looking at, it was under $5. It's a fair price. AMC right now is definitely ballooned. It's definitely overvalued, but it's only about triple, quadruple what it was. So if you want to ride the train and you're going to have that let it ride mentality, and you're like, well, people on GameStop made 50 times their money, I'm going to put it into AMC and I'm going to make, let's say, 20 times my money. Because the idea is that you're always trying to do a half, and that's how the trickle down economic, the rebuy or the flooding of the market works, is that one company goes up 50 times. You have smaller companies, and they might go up a fraction. So they won't go up 50 times, but they'll go up maybe 20 times, 10 times. As long as you're not expecting, it's the same thing with Bitcoin and all the other, like Ether, right? Because Ether's going to go up, maybe not the same as Bitcoin, maybe more than Bitcoin. But the idea is the trickle-down effect, right? Because if you sold Bitcoin at $40,000 per piece, and theoretically you can buy 10 Ether coins for that, and then expect that Ether is going to go up to the same degree, and it goes down, down, down. Obviously, a lot of people can lose their money. That's why I strongly suggest that whatever money you start in with, let's say you start in with $1,000. If you're able to double $1,000, take the $1,000 out of it, and look at it as that's your money. Okay, you're not going to lose that $1,000 now. And the mentality that you should have is play with that $1,000 that you actually profited. That's what I would tell people. It's the same. It's the same as if you go to a casino and you have, let's say, $200, and let's say you bet black or red on a roulette table and you doubled your money right away. Put that $200 in your pocket that you came in with, and now you can play with the $200 that you made. And listen, if you go down to zero, you can walk out of that casino and say, I didn't lose any money today.
I'm even.
Yeah, exactly. And that's where the degeneracy from my end comes from, because I'm the kind of person where if now I'm playing with my profit, and technically I can tell myself that I haven't lost any of my, real money, then hell, man, just troll away.
But my question to you is are all these people going to do what you're saying, or is it going to be like, I'm going to make my money and then get out of the game? Or is it like a mixed bag of people?
Well, you have to look at the volumes. If you're dealing with larger amounts of money, supposedly reading some of the comments, some of these people are playing with tens of thousands of dollars. Now listen, if you're playing with tens of thousands of dollars and you wake up in the morning and you have hype, listen, if you're 10% of $20,000 is $2,000. Okay, if you can make that in a day, that's lawyer money. So if you're playing the market that way, which some people do, I would like to think that what's happened is you might have, let's say, 1 million of these, because there's now it's like 5 or 6 million members of the Wall Street Bets community. Let's say 1 million of them are willing to put down $1,000.
Yeah.
Okay, and you're talking about right now, because from the beginning, those people, on GameStop, for example, if you bought $1,000 a week ago, you got a lot more than one grand now. So if you go ahead and you're still playing with that $1,000 mentality, that's $1 billion. People who don't want to do the math. 1 million people buying $1,000 is $1 billion.
So one question I would have is, what is the likelihood of this subreddit group or Reddit group, without any interference from anybody, from the government, from anybody else, what is the likelihood that they could kind of end the hedge fund people? Like, you know what I mean?
Zero chance. And the reason, there's zero chance. So I've posted to some people to try to get them to understand that unfortunately life is never black and white, and there are no good guys.
Because I see a lot of romanticizing about this.
Yeah. So
it's not that easy.
The first thing that I did was I looked up the ownership for GameStop. And one of the biggest owners of GameStop, percentage-wise, is BlackRock, which is a wealth fund. It's the biggest wealth fund in the world.
And they were involved in the 2008 crisis as well.
So they were like 10 or 11% of the ownership stake.
Right.
So if you're going to tell me that the largest wealth fund in the world has a 10, 11% stake in this whole, in this whole rush,
right.
I don't really see how that's going to be the end of hedge funds. The reality is that it can work once or twice. So, for example, this group, it was Melvin's Capital.
Melvin's Capital, okay.
Yeah, that was the hedge fund. And Citadel and Point72, they backed up Melvin's Capital $3 billion into the fund to keep it going.
Right.
So we're gonna figure out what's exactly gonna happen. So you can target a hedge fund like that. Okay.
Yeah.
And
it's public knowledge. I mean, I do have a bigger question.
Yeah, so that's all well and good. So what I'm saying is that you could target a hedge fund, but what you did was, because you understand that GameStop is not owned by the people, so to speak.
Right.
So by attacking one, it's basically, so in Wall Street with Michael Douglas, he talks about a zero-sum game. And a zero-sum game is where if one party loses, there's another party that gains from the loss.
It's not a question of enough, pal. It's a zero-sum game. Somebody wins, somebody loses. Money itself isn't lost or made, it's simply transferred.
So there's billionaires that made a ton of money from GameStop going up. Yeah. So all you could do is, essentially, if you want to go down really far down the path, what would happen over time is you would basically just transfer wealth. Not in the way that you're thinking, though. You would transfer wealth from, like, essentially half of the billionaires to the other half of the billionaires.
The richest 1% of this country owns half our country's wealth, $5 trillion. 1/3 of that comes from hard work. 2/3 comes from inheritance, interest on interest accumulating to widows' and idiot sons. And what I do, stock and real estate speculation. It's bullshit. You got 90% of the American public out there with little or no net worth. I create nothing. I own.
So that's how you have Elon Musk, for example, becoming the richest person in the world. Yeah. Now, there are people saying, oh, well, there's ordinary people that made a ton of money off the GameStop. Right. I would look at as like lottery winners. Right? So you're like, an average person buys a lottery ticket, wins all this money, and how do they spend that money? Yeah. How many of these people that made a ton of money on GameStop are not going to lose money on another stock venture? Like, maybe these are the same people that look at another stock that goes up, and they buy it when it's too high up, it crashes down, and they're like, hold it, hold it, hold it, and they sell.
But 5 years down the road, he doesn't seem so much of a genius.
But this is why I've always been a huge proponent of the stock market. Because the stock market really is the fastest way that an average person could become, as we consider, rich. Because you could take $1,000, and if you did something that was extremely high risk, and you made 10 times your money, and now you have $10,000, you take $10,000, and you make another high risk, and make 5 times your money, and you're at 50 grand. Now all you have to do is double your money, which you can do in a number of ways. You could actually double your money with a legitimate blue chip stock that was just undervalued, or there was a war, or there was a scandal or something else, like Facebook dipped and it doubled. And now you've taken $1,000 to $100,000. You could theoretically do that in a year with 3 moves. 3 moves. You could do that at a casino too. You could go to a casino with $1,000, and in a lot less time than a year, you could do it in an hour. You could turn $1,000 into $100 grand. But the casino, I mean, you're that is just straight up gambling. At least with the stock market, there is some semblance of, weighing the odds. The other thing with the stock market is it's not an all or nothing. So in a casino or in sports betting, you either win your money or you lose everything. In a stock, like let's say you bet wrong on a stock and you lost 20%. Then you go into another stock, you doubled your money. Then you go to another stock, you lost 20%. You go to another stock, you doubled your money. You're still up. Yeah. But technically you made 2 wrong calls and you made 2 right calls. So you're right 50% of the time. And it depends when you are right, how right you are. But the stock market is the fastest way that an average person could become so-called rich. It is. But that doesn't mean that the Reddit community is going to turn all these average people into millionaires.